It feels like everywhere you turn, people are talking about inflation, interest rates. It's this constant buzz.
Oh, absolutely. It's not just background noise either, is it?
No, it directly hits things like, well, your rent, what you pay for gas. It's like this invisible hand shaping things day to day.
It really is. These aren't just numbers for economists. They're pulling the levers on the cost of living, affecting pretty much every financial choice you make.
Yeah.
Understanding them is just crucial right now with how things are shifting.
Exactly. And that's why today we're doing a deep dive. We're getting into the latest inflation report, specifically the Consumer Price Index for May 2025. We've got a detailed report here, fresh CPI data, expert analysis on what it all means.
And the goal really is to cut through the chatter, give you a clear picture. Where does inflation actually stand? What's pushing it up? What's pulling it down?
And importantly, what might the Bank of Canada do next? We want you to feel genuinely well-informed after this.
Let's do it.
Okay, let's unpack this then. The May CPI numbers are out. What's the headline figure? Any surprises this time?
Well, the headline Consumer Price Index, the CPI, it rose 1.7% year over year in May.
Okay, 1.7.
Yeah, which is exactly the same as April's 1.7%. So on the surface, it landed right where analysts expected, especially after, last month felt like a bit of an unpleasant surprise.
Right. So steady as she goes on the surface.
Sort of, but like always, the real story is underneath that main number. A big reason that top-line figure was held back was actually the removal of the consumer carbon levy.
Oh, okay. So take that away and the picture changes.
It does. If you strip out energy, for example, the CPI was up 2.7% in May. That's actually down a bit from 2.9% in April. And if you look month over month, seasonally adjusted, the CPI kicked up just 0.2% in May. That follows a much bigger 0.6% jump the month before.
So even with the steady headline, there are definitely moving parts, almost like different forces pushing and pulling.
That's a great way to put it. The pressure points are shifting.
Okay, so what were some of the things pulling inflation down this month? Where did we see some relief?
Yeah, there were some pretty significant areas cooling off. Let's start with rent. That's a big one for many people.
Definitely. What happened there?
Rent price growth actually slowed quite a bit. It was 4.5% year over year in May, down from 5.2% in April.
Okay, that's noticeable.
Very. And the slowdown was really pronounced in Ontario. There, prices rose just 3.0% in May compared to a 5.4% rise in April.
Wow, quite a drop in Ontario. Why the change?
Seems to be mainly two things. More rental units becoming available and population growth slowing down compared to last spring.
Right.
And because Ontario carries so much weight in the national calculation, that slowdown there was enough to pull the national average down, even though rent actually grew faster in 7 other provinces.
Interesting. So Ontario's market really swayed the national figure. What else cooled off?
Mortgage interest costs. That index slowed down for the 21st month in a row.
21st.
Wow. Yeah. It rose 6.2% in May, down from 6.8% in April. You're seeing the effect of past rate decisions kind of filtering through.
Makes sense.
And travel. If you're planning a trip, maybe some good news. Travel tours actually fell 0.2% in May after jumping 6.7% the month before.
Bit of whiplash there.
A little bit. Yeah. And air transportation prices dropped 10.1% compared to last May. That followed a 5.8% decline in April. So cheaper flights, it seems.
Okay, so relief on rent, mortgage costs slowing, travel easing up. What about the gas pump? That's always front of mind.
Right. Gasoline was again a big factor, pulling down the annual inflation rate. Prices were down 15.5% compared to May of last year.
15.5% lower than last year.
Yep, after being down 18.1% year over year in April. And again, the main reason gas prices in May 2025 were so much lower than May 2024 was primarily that removal of the consumer carbon levy.
That levy removal is really showing up in the numbers then.
It definitely is for the year-over-year comparisons.
Okay, but it's never all one direction, is it?
Yeah.
Where do we still see prices pushing upwards in May?
That's exactly right. Take gasoline, for instance. While it was down massively compared to last year, if you just look month over month, from April to May 2025, gasoline prices actually increased 1.9%.
Ah, okay. Why was that?
Mostly due to higher refining margins and the costs associated with switching over to the summer blend of gasoline.
Right, the seasonal switch.
Yeah.
So a short-term bump, even within that bigger year-over-year drop, that really shows the nuance.
It does. Perfect example of why you can't just look at one number.
What else was pushing higher? New cars, maybe?
Yeah, new passenger vehicles. Prices rose 4.9% yearly in May, which is a little faster than the 4.6% increase we saw in April.
Hmm. Any specific reason for that acceleration?
Well, the report suggests it was primarily driven by higher prices for some electric cars, so maybe some specific dynamics in the EV market there, perhaps supply or demand related.
Okay, so we've got this real mix then. Core inflation measures are cooling down a bit.
Right, all four key measures cooled.
Rent and travel are providing some relief, but then you have things like month-to-month gas prices ticking up, new EV prices rising. It sounds, well, complicated for the Bank of Canada.
It certainly is.
How do they read this? Is this enough of those stronger signals they keep talking about, or is it just more noise for them?
Well, look, the May data did come in basically as expected, which is better than an upside surprise like April. But will they rush to cut rates based on this? Probably not. They'll want more confirmation.
They need to be sure.
Exactly. The good news for them, as you said, is that core inflation cooled. Falling travel, tour, and rent prices definitely helped there. And looking ahead, the challenges in the housing market, especially in Ontario, are likely to keep a lid on further big rent gains.
So that sounds like maybe the trend in rent could continue downward or at least stay moderate.
That's the expectation. Plus, you add in a labor market that's, well, still pretty soft, and domestic demand growth that's best described as tepid.
Meaning consumers and businesses aren't exactly spending wildly.
Correct. Retail sales, for instance, came in weaker than expected recently. All that should help keep inflation contained. Now, the big wild card is how trade negotiations evolve.
Ah, yes.
But based purely on the domestic economic softness, there should be room for the bank to deliver, say, 2 more rate cuts this year.
They have been pretty clear about the risks there, though. Didn't they specifically mention not wanting a tariff problem to become an inflation problem?
They did, very explicitly. They're watching that closely. And another really interesting point they've raised, they've suggested that some of their main core inflation measures, the CPI trimmed mean and CPI median.
The ones that strip out the extreme.
Exactly. They think those might actually be biased upwards right now because of, quote, measurement issues.
Measurement issues, what does that mean?
They haven't fully detailed it yet, but they are planning to publish more research on this. It suggests they're questioning whether their standard tools are perfectly capturing the underlying trend right now.
That adds another layer of complexity to their decision-making.
It really does. So look, the bank isn't going to just throw away its credibility as an inflation fighter. Credibility it fought hard to win back.
No, definitely not.
But if the economy continues to soften, if growth keeps easing, that will likely push them towards cutting rates maybe 1 or 2 more times before the year is out.
Okay, so recapping this deep dive.
Yeah.
May's inflation report was steady on the surface at 1.7% year over year, but really a mixed bag underneath.
Absolutely.
We saw real downward movement in important areas for consumers' rent, mortgage interest costs slowing, travel getting cheaper. A lot of that helped by the carbon levy removal effect on the annual numbers.
Right. But offset by some other pressures.
Yeah, like the month-over-month bump in gasoline and rising prices for some new vehicles, particularly EVs. It paints a really nuanced picture for the Bank of Canada.
It does. And it just underscores how these numbers, these percentages we talk about, they aren't abstract. A small shift can mean real changes in your mortgage payment or the cost of that vacation you're planning.
Directly impacting your wallet.
Exactly. Understanding these forces helps you navigate your own financial situation.
So thinking about what's next, the bank is looking for those stronger signals. They're even questioning potential measurement issues in their core data. It makes you wonder, what's the one thing that might really tip the scales for those future rate cuts? Is it going to be how those trade talks shake out, or maybe further shifts in the housing market? What's the key domino to watch?